The financial world is once again buzzing with intense speculation and heightened expectations as discussions surrounding the potential revaluation of the Iraqi dinar gain momentum in 2025. The chatter is growing louder, the projections are becoming bolder, and the question on the minds of investors and currency watchers alike is whether we could see the value of the Iraqi dinar surge to between $3 and $5 in the coming months. This speculation has been building for years, but now, a combination of economic shifts, regional developments, and political moves is placing the Iraqi dinar firmly in the spotlight. The narrative unfolding is complex, and for those paying close attention, it feels like we are standing at a critical financial crossroads. In Iraq, the government has been making moves that some analysts interpret as laying the groundwork for a stronger currency. Over the past year, there have been concerted efforts to stabilize the economy, rein in inflation, and rebuild confidence in the financial system. The country's foreign reserves have shown a notable increase, oil production has stabilized at competitive levels, and international trade agreements are being expanded to open new markets for Iraqi exports. All of these factors contribute to an environment that could, in theory, support a higher exchange rate for the dinar. However, it is important to remember that the jump from the current rate to $3 or even $5 per dinar is not simply a matter of economic health. It is a radical shift that would require significant policy moves and unprecedented levels of market confidence. The global currency market operates on a delicate balance of trust, supply, and demand. For the Iraqi dinar to leap to such high valuations, it would not only need a rock-solid economic foundation but also widespread recognition and acceptance from major international financial institutions. This means that any potential revaluation would likely be tied to larger geopolitical and economic developments, possibly involving agreements with the International Monetary Fund, World Bank, or strategic partnerships with leading economies. Investors have been closely monitoring the signals coming out of Baghdad, looking for hints of such moves, while financial insiders dissect every public statement from Iraqi officials for hidden clues about the future. Fueling the speculation is the reality that Iraq's vast natural resources, particularly oil, give the country a potentially powerful economic advantage. With the global demand for energy remaining strong, Iraq's position as one of the world's top oil exporters means it has leverage on the international stage. A higher currency value could significantly increase the country's purchasing power, reduce dependency on imports, and provide a stronger base for infrastructure development. Supporters of the revaluation theory argue that this would also attract greater foreign investment, creating a cycle of growth that sustains the new exchange rate. But skeptics point out that Iraq still faces significant challenges, including political instability, corruption, and the need for substantial modernization of its financial systems. The current market sentiment is a mix of excitement and caution. In the world of currency speculation, sentiment can sometimes move faster than facts, and this is where the risk lies. Many retail investors, especially those who have held dinar for years in the hope of a dramatic payout, are watching developments closely, fueled by online discussions, financial blogs, and video updates from currency analysts. Some are convinced that 2025 will finally be the year their patience pays off, while others warn that without clear, official confirmation from credible financial authorities, any talk of a $3 to $5 valuation remains speculative. This divide between optimism and realism is what makes the current moment so volatile and intriguing. In recent months, there have been unconfirmed reports of private contracts and internal banking discussions that hint at higher rates being considered for specific transactions. While such arrangements could be part of broader financial reforms, without public transparency, they remain in the realm of rumor rather than fact. Still, the mere existence of these whispers has been enough to energize parts of the investor community, who see them as evidence that preparations for a rate change are already in motion. The challenge for these investors is separating genuine signals from noise in an environment where misinformation can spread rapidly. If Iraq were to pursue such a dramatic revaluation, the immediate effects would ripple far beyond its borders. Regional economies would be forced to adjust, currency exchange markets would experience significant volatility, and there could be both winners and losers depending on how quickly and smoothly the transition occurs. For Iraq itself, the move would be a defining moment, potentially transforming its economy overnight, but also carrying the risk of destabilizing certain sectors if not managed carefully. Economists stress that the transition would require airtight planning, including measures to control inflation, safeguard against speculative attacks, and ensure that the new rate is sustainable in the long term. The role of global geopolitics cannot be overstated in this equation. Iraq's relationships with major powers such as the United States, China, and countries within the Gulf Cooperation Council will heavily influence whether such a revaluation is feasible. Strong alliances could lead to coordinated economic support packages or trade agreements that bolster the dinar's value. On the other hand, any regional tensions, internal political upheaval, or disruptions in oil exports could derail the process entirely. The coming months will be critical in determining whether the current momentum builds toward a historic financial shift or dissipates under the weight of complex realities. Another important consideration is how the Iraqi public would react to such a change. A higher currency value could mean lower prices for imported goods and increased purchasing power, which would be welcomed by many citizens. However, if the transition is mishandled, it could lead to sudden inflationary pressures, particularly if businesses and financial institutions struggle to adjust to the new reality. The government would need to communicate clearly with the public, implement strong consumer protection measures, and ensure that the benefits of a stronger dinar are widely felt rather than concentrated in a few sectors. 2025 continues to evolve. For those on the outside looking in, the prospect of a $3 to $5 dinar remains both tantalizing and uncertain. The numbers themselves are impressive. A shift of that magnitude would represent one of the most dramatic currency revaluations in modern history. The potential returns for investors who bought dinar at much lower rates are enormous, which explains the sustained interest and emotional investment in the topic. But the scale of the change also underscores just how rare such moves are in the global financial system, and why they require extraordinary conditions to become reality. As we move deeper into 2025, the key to understanding what's next for the Iraqi dinar will be found not in rumors or speculative chatter, but in hard economic indicators and official policy announcements. Watching Iraq's foreign reserve levels, oil export performance, trade balances, and political stability will provide the clearest clues about whether the conditions for a massive revaluation are truly coming together. Until then, the dinar will remain a currency caught between two narratives, one grounded in cautious analysis of present realities, and the other fueled by bold visions of a transformative future. In this environment, investors must navigate a fine line between seizing potential opportunities and protecting themselves from overexposure to risk. The allure of a $3 to $5 dinar is undeniable, but so too is the need for disciplined, fact-based decision-making. As events continue to unfold, one thing is certain: whatever happens next with the Iraqi dinar will capture the attention of financial markets worldwide, marking either the beginning of an unprecedented economic chapter or a reminder of the gap that can exist between speculation and reality. And for now, the world waits, watching Iraq with anticipation, as the story of the dinar in